Hi everyone, I'm planning to do a webcam Q&A, so post your questions in the comments. In this video, I'm going to go in more detail in the high time frame, medium time frame, and the low time frame counts, so I can provide you with as much detail and as much insights as I can for what price might do next. Now on the high time frame, we have a three-wave A over here, followed then by this expanded flat in the B, and then we would expect a move down for eventually wave C. Now this is the more, let's say, bullish scenario, because we still expect price with this scenario to move up, as this 5-wave impulse has not yet finished, if this is indeed then correct. So we have wave 4 yet to be made, and then eventually wave 5 to the upside between about 34k and 27.7k, which is the most common target for a wave C. The rare wave C target is between 25.4k and then 27.7k. Now for a wave 4 tends to finish between the 0.236 and the 0.5. My invalidation is below here because wave 4 tends not to go below the 0.5 Fibonacci. And the reason that I think this target, the common wave target, is so interesting for wave C is also because it has great confluence with the 30k support area that we had over the past couple of years over here in 2021, more support over here in 21, and eventually we had a bit of a range in early 2022. And now we can backtest this area and eventually move to the downside, which I think would be a very, very nice backtest of a very strong support area turning into a resistance flip. Now, on the other hand, we have the high time frame more bearish scenario. And in this case, 1, 2, 3, 4, 5 is already in. The high is in. We're going to move to the downside and at least take these lows for lower levels to come. Now, of course, what I don't like about this scenario is that we didn't hit the wave C rare target as well as the wave C most common target. We're still actually far below the common target. So yeah, the invalidation is taking the high, of course, once again. It did, however, confirm to the minimum requirement for a wave C, which is taking the high of wave A. So in an expanded flat, wave C should at least take the high of wave A, which it has done. So theoretically, it is a valid scenario. However, knowing that the most common target is up here and the rare target is up here, and we haven't hit both of these, makes me put this scenario as an alternative and not as a preferred count. Now on the more medium time frame, this is a bullish count that I have on my chart right now, where we are still working on our wave 4 over here. In this case, we have a 3-wave structure in the A or W, followed by another 3-wave structure in the B or the X, followed then by eventually the last structure in a C or Y, which finishes 4, and then we move up for wave 5. Now more locally, this could mean that this 3-wave structure is an A, followed by a B, and then eventually a C to the upside, where I do think we might take the lows once more before moving to the upside for wave C to finish B or X. One thing to note though is that this A is very small in comparison to this big B, so that is something to actually think about. However, looking at the targets for Elliott waves, so far so good. So if this is an A, B, C expanded flat, then the B over here is the Fibonacci that you see is the 1.236, the yellow line, and the 1.38, which is the orange line, which is pulled from then the beginning of A to the low over here. And then eventually this then is an A, 3-wave B, and then a 5-wave possibly in the C to finish an expanded flat B, which then ends between these fibs taken from the low here of Y to the high of A. We would then of course expect a move again to the upside, where I do have an interesting target box which I would like to hit eventually, which is at about 24.7k. So that's something to remember. But this is at least one scenario. Another bullish scenario that I have over here is exactly the same. The only difference is that this is a WXYXZ, but other than that, the rest of the scenario is pretty much the same. And the last scenario that I have over here is that this is a WXYX, and we're still working on the Z wave. So if I put my targets on as well, you can see that for the Z, it would be very nice to finish in this target box. And if I zoom in a little bit, because it becomes quite a lot of clutter on my chart right now, you can see there's a couple of other confluences here as well, a time naked point of control, but most interesting, a weekly and a daily at exactly the same level, and also a daily naked point of control. Now, if this is indeed wave Z, we can expect a 3-wave structure one could say, and I'll go to it in more detail in the lower time frame, but this can be a 1 2 3 1 2 3 and then a 1 2 3 4 5. However, wave C is very extended, and if this is the wave C target, which is the 2.618 trend-based fib extension taken from the high of X to the low over here of A, I'll show you on the lower time frame, and then B, this is very extended and very, very rare for an ABC to reach these target levels. So if this is an ABC, pretty rare. However, this can still be an impulsive wave of a 1 2 3 4 5 followed by a 3-wave structure to the upside and then another one. So then we have an A, B, C, and then eventually move to the upside for wave 5 as then wave 4 is finished. Interesting for the targets, I think, to show you, besides the fact I have a target box over here with some confluences, is also that you see here a 1 and a 1.236, and these fib levels are important targets for a wave Z. So over here, if I show you where I pulled these fibs from, it is a pull that I took from the high over here. Did I say it correctly? No, from the beginning of 3 to then the low of W, and then you put it on the high over here of this X. So you compare basically W with wave Z in this case, and then the 1 and the 1.236 is an important target for wave Z, and so far we found support on the 1-to-1 extension over here, trend-based fib extension, but we can go as low as 21.6k basically, which is the other target for this wave Z. So that is a nice amount of confluence, Elliott wave confluence in this area as well, and the green fibs that you see have been taken from the absolute lows of wave 2, which is down here, to the highs of 3. Those fibs are also adjusted to the log scale, which I would recommend in case you want to work on higher time frame level stuff. Put the things on log scale and put your chart on log scale here as well. And then you can see the 0.236 and the 0.382. Most commonly, a wave 4 ends around the 382, but the whole area between the 0.236 and the 0.5, which I don't have on my count here at the moment, is a valid target. So then we go to the bearish scenario that I have on the medium time frame, and in this case this is an alternative scenario, definitely not my preferred scenario, and the reason for this is actually because of only this structure over here. So this is a 1-2-1-2 scenario where eventually the high is already made, as mentioned before earlier in the video, and this 1-2-1-2 would then lead to a very explosive move to the downside. Now, of course, based on what you see over here and the explosive amount of volume that we had as well, you can see the wick over here, high amount of volume. One could think that this is the beginning of a very, very big move to the downside going towards, I don't know, like 13k, for example. However, don't forget the bullish scenarios are still in play, and as long as those are not invalidated, everything is possible for another move to the upside. So we always, with Elliott waves, try to compare we have the probabilities of the bullish and the bearish scenarios. For now, however, my probabilities are better for the bullish scenarios, but of course I have my invalidations, which you should have too, in case scenarios become invalidated and eventually we will go to the downside. Now, the reason why I don't necessarily like this scenario, as mentioned, is because of this structure over here, and I'll tell you why. We're on the 1 hour time frame, but this was, or at least at the time, very, very, very likely to be a triangle structure. And it looks very much like a 1, 2, 3 structure, like a 3-wave and not a 5-wave structure. The only way one could potentially count this as a 5-wave structure if wave 2 is over here. But then wave 2 is so short compared to the very long wave 4, that is very unusual. So that is very, very, very rare if ever I saw it. So I would prefer this to be a 3-wave structure, which would then support the more bullish scenarios instead of a 5-wave structure. So this is the only reason why this scenario for me is not my preferred, but at the moment my alternative scenario. And then if we go to the lower time frame counts, this is what I have on my chart right now. So in this case, this then is the high of X in a W, X, Y, X, Z. You can see the Z down here in my screen. And in this case, I have the scenario of the ABC, the yellow count over here on my chart, where this is wave A, then B, and then eventually C. And again, we have the green 2.618 taken from the high of X to the low over here of A to the high of B. Then put the extension on of 2.618 and you'll find the target. We kind of hit it to the dollar, very nice, but it is very extended for a wave C and a very rare target. So this count is a little bit less likely in my opinion, but of course it is still valid. It's a rare target, but it is a target nonetheless. Now, if this is a 1, 2, 3, I still expect some sort of a wave 4 to be made. Again, the most common targets are the 0.382 and the 0.5. What I like is that we have the low over here at 22.7K. And I think that could be an interesting level as just like a very simple like support resistance flip, or at least closing a little bit of this inefficiency as well. So this is a level that could be of interest. Now this wave 4 we might be ranging for a while, especially after a drop like this. Price tends to range for at least a couple of hours, if not days. And it's of course a wave 4, which is a complex correction, so anything can happen in this wave 4, but mainly ranging up and down. And this is the area of interest for a wave 4. Before then, I believe a wave 4 to the downside, or a wave 5, sorry, to the downside, which would end in this target box with the confluences that I mentioned earlier of the weeklies over here, a daily and a daily naked point of control. So that is a very interesting level. Now the other scenario in this bullish case is that this whole thing is going to be a 5-wave structure. So if I then remove this from my chart quickly, then this is some sort of a 1, 2, 3, 4, 5. And then we get A, B, C in the Z. So that is the other more bullish scenario in this case, because this would then still potentially finish the correction, finish wave 4 before then on the higher time frame moving up for wave 5. So besides this ABC, you can also see this as a full A, then a B, and then a C zigzag. So that is the other bullish scenario. And then the more bearish scenario is again that this is a 1, 2, 1, 2, and then we are currently working on our way to the downside, as mentioned, to prices of 14, 13K, where this then is wave 1, 2, and then over here another 1, 2, 3, 4, 5, 4, 5, and basically just saying a lot more downside to come. So if we are really gonna move quickly to the downside over here, that is when this scenario becomes more valid. So if you have any questions for the Q&A, put them in the comments. I'm happy to answer your questions. I'm going to be on webcam as well, so I'm going to be talking to you face to face, sort of. If you have, if you enjoyed the video, make sure to like the video, comment, subscribe, all the basic stuff. And for now, I'd like to thank you for your time watching this video with a little bit more detail about the Elliott wave counts. And I will see you at the next video that I will post at 7 p.m. tonight, CET, Central East European Time. For now, thank you. Bye-bye.